Thank you so much for all the great comments on our videos. We appreciate you. We appreciate those comments. We appreciate you sharing our content. Back in April 2020, I made a video where I talked about the falling mortgage interest rates. And I had predicted that we will see rates going even lower. And I was right. The coronavirus pandemic has brought enormous hardship to American families. About 4 million Americans in forbearance. The Federal Reserve Chairman, Jerome Powell, the Treasury Secretary, Steve Mnuchin, they understand the housing market is the main factor driving consumer spending in the United States. This is why they are doing everything possible to see to it that the interest rates stay low. Think about it. When houses are selling, every other aspect of the economy is selling. Banks are making money, insurance companies making money, retail stores are making money, furniture stores are making money. Everybody's making money. I am sure the Federal Reserve Chairman is taking from the 2008 recession playbook. Back in 2008, the Federal Reserve dropped interest rates from 7.75% to 4.5%. A lot more people were able to afford houses, and a record number of people were able to refinance their home. This left a lot of cash in the hands of Americans. This triggered consumer spending, and that is how we're able to get out of the recession. C2C is a real estate mentorship community, and all we do here is talk about your finances because we understand it is the foundation for your family's success. On June 16th, Federal Reserve Chairman Jerome Powell told the Senate Banking Committee the uncertainty of the coronavirus pandemic is making it very hard for the economic recovery. I guess he's taken from the 2000 recession playbook and keeping the mortgage interest rates low. We are not sure for how long these rates will stay low, but if I were you, I will take advantage of it. I was with one of my clients today in Katy for a 15-year mortgage, interest rates at 2.25. This is unheard of in my 17 years careers in the mortgage industry. On my last video, I talked about the importance of setting up the right business structure. I also talked about the main benefits of business ownership, and one of them being the fact that you can deduct all of your business expenses, thereby reducing your taxable income. Your ability to deduct business expenses depends on your approach to your taxes. Today, we're going to talk about tax planning and tax compliance. Tax planning is simply being proactive, using all the legal tools to help reduce your taxable income. Tax planning occurs all year round. So if you are a small business and you only visit your tax preparer or your accountant at the end of the year, then you are not on the right track. Because tax planning takes place all year round. Tax compliance takes place from January to April 15th. Tax planning is about being proactive. being able to navigate through the complex tax laws, being able to talk to your accountant, have a meeting with them at least 4 or 5 times a year, while tax compliance is simply a requirement. The law says if you make income, you must file your taxes. Tax planning is for the wealthy and corporations. In 2018, Amazon made $232.9 billion and they paid 0 income tax, 0 corporate tax. Is that ethical? It depends on what you think. Is that legal? Yes, it is legal. The wealthy and corporations, they do tax planning, while average citizens, they do tax compliance. Tax planning requires an in-depth knowledge of the tax code, while tax compliance, you just need to know what it takes for you to file during your tax season. Tax knowledge will allow you to take the legal deductions as they become due. Meanwhile, tax compliance is about the software. TurboTax and other softwares, that is what you're limited to. Unfortunately, most of us minorities and our minority businesses will fall under tax compliance. If you are visiting your accountant just once a year, then you're practicing tax compliance. Because the wealthy people and the corporations, they do tax planning. The wealthy people and the corporations, they have the money so they can pay the best accounting firms to keep them within the legal beltway of the tax code. The average citizens and minorities, they make the least money, they pay more in taxes. The wealthy and the corporations, they make all the money and they pay very little or no tax. Understanding your tax liability and deductions is key for the survival of your business. IRS Tax Code 162A, it says, any ordinary and necessary expense that is in the pursuit of income in your business is tax deductible. The wealthy people and the corporations, what do? They actually determine what is ordinary and necessary in the pursuit of their business. The average citizens and minorities, because they practice tax compliance, they let the IRS determine what is necessary and ordinary for the pursuit of their business. Because they only think about taxes from January to April. The wealthy think about taxes all year round, and they are looking for all the legal loopholes and all the opportunities to maximize. So they get to determine what is ordinary and necessary for them. But the average citizens, the IRS is going to tell you what is ordinary and necessary. But remember, the difference between these two is the knowledge. There's nothing stopping the average citizens from also understanding what the wealthy and the corporations do. Ordinary citizens and minorities must step up to tax planning and not tax compliance. It's what you don't know that you think you know that is killing you. Knowledge becomes the key factor. I take an air ticket here to Maryland. It all depends. You rent a car there, it's tax deductible. So it all comes down to what? To knowledge. Average citizens and minorities must step up and learn what the wealthy people know about taxes. This is the only way you can minimize your taxable income. The IRS says, so long as that activity is in the pursuit of income in your business. The best way to empower small communities is to empower small businesses. But how come small businesses who are making the least money are paying the most in taxes, while the wealthy and the corporations who are making all the money, they pay little or no tax? It all boils down to your approach to your taxes. Are you doing tax compliance or are you doing tax planning? It will make no sense that we struggle and take our hard-earned resources and we open a business and then we are losing a chunk of that money just for paying taxes. When we talk about small business deductions, we say they are the life for any business. What are some of the small business deductions we talk about? The list I have here is not exhaustive because remember, the US tax code is subjective. So long as any expense you can justify to the IRS that that expense was in line in the pursuit of income, it's tax deductible. Travel expenses, airfare, hotels, rental cars, car-related expenses, what? Mileage, business liability insurance, home office expense, office supplies, phone and internet. Your cell phone too is tax deductible so long as you can show the IRS the business use and the personal use. Depreciation, furniture and equipment. You depreciate furniture and equipment over the useful life for that equipment. Interest on the business loans. Professional service fees. Employee salaries. Child and dependent care. If you have children, so long as they are 12 years and younger, you can deduct the cost you keep them in daycare while you're running your business. That will also work for elderly parents. So long as there's somebody who's taking care for them, it's tax deductible. Accounting and tax preparation fees. Education, so long as it's necessary in line of your business. Material and labor. Marketing and advertising. Keeping proper records is one very important thing. Improper records will help your accountant to determine those deductions and how they can fit them into the system. This topic to me is very, very interesting, and I want all of us to take advantage of it because there is no need suffering and working on your hard-earned money and you have to pay this big chunk of it in taxes. No, let's invest some time. Let's talk to our accountants. Let's do some self-learning and let's make sure we can get the deductions that we deserve. Thank you again for watching and sharing our videos. I've had lots of requests about resources for minority businesses, either be it a grant or a loan. I thought I should share some of the resources with you here as well. The Meridian Management Group Business Loan. You can get up to $200,000 with a 550 credit score. The SBA Small Business Administration Lender Match. This is a service that connects you with businesses that are approved SBA lenders. SBA will guarantee the loan for you so long as you have the right business structure. Their interest rates are very low and their terms are very flexible. You can get up to $100,000 credit limit with the State Department Federal Credit Union. If you are not familiar with the State Department Federal Credit Union, that is one of the best credit unions in the United States of America. They cater only for members who are and family who are part or affiliated with the State Department. But there's a cheat sheet on how you can become part of the State Department Federal Credit Union. The American Consumer Council has an affiliation with the State Department Federal Credit Union. The American Consumer Council is a non-profit organization that is centered on consumer education and financial literacy. So you can get membership on ACC for as low as $15 one-time payment. Your membership with ACC will allow you to open an account with the State Department Federal Credit Union. Why is it important? They will give you the highest credit limits on your credit cards, and they are known for having the lowest interest rates in the country. So if you are businesses and you're suffering, what I'll do, I'll make sure I include the link to all these resources at the foot of this video on YouTube. So you can go there and see how you can get some help for your struggling small businesses. C2C Mentors is a real estate mentorship community. All we do here is talk about your finances. We understand it is at the foundation for you and your family's success. Please, if you have already subscribed to our video, we thank you. If you have not done so, do subscribe, and see you on our next video. Thank you.